He was perhaps the most audacious and brilliant speculator of his era, a man whose life was a dramatic tapestry woven with threads of unprecedented triumph and devastating ruin. His story is not merely a chronicle of financial transactions, it is a timeless narrative of human psychology clashing with market forces, a testament to genius and the perils of hubris. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain. Livermore's life encapsulated the very essence of speculation, the intoxicating highs of monumental gains, and the crushing lows of utter financial devastation. He experienced the extremes of both wealth and bankruptcy, not once, but multiple times over. Each spectacular rise was often followed by a humbling, sometimes catastrophic fall. Yet, within each of these dramatic cycles, there lay profound lessons about market mechanics, about human nature, and, most critically, about the relentless self-discipline required to survive and thrive in the volatile world of finance. His journey serves as an eternal beacon, illuminating both the immense opportunities and the inherent dangers on the path to extraordinary riches. He was a figure of immense self-reliance, a lone wolf who trusted his own observations above all else. He developed a deep, intuitive understanding of market behavior, recognizing patterns in price and volume that others overlooked. But even his unparalleled brilliance was not immune to the siren calls of greed, hope, and pride, which periodically led to his downfall. His story is a powerful reminder that even the most exceptional talent requires unyielding humility and consistent adherence to disciplined principles. The saga of Jesse Livermore offers an unparalleled education for anyone seeking to understand the true nature of speculation. It dissects the psychological traps, the strategic missteps, and the personal demons that can derail even the most promising careers. His life, chronicled extensively in Edwin Lefèvre's Reminiscences of a Stock Operator, a thinly veiled autobiography, and his own writings, provides a masterclass in market dynamics and the unforgiving lessons paid for in millions. Therefore, this exploration will delve into the extraordinary rise and tragic fall of Jesse Livermore, examining the pivotal moments, the brilliant insights, and the critical flaws that shaped his legendary career. His story is a vivid testament to the enduring truth that while markets may change, the fundamental human emotions that drive them, and the timeless principles required for their mastery, do not. Jesse Livermore's journey into the world of speculation began not in the grand offices of Wall Street, but in the unassuming confines of a small provincial town. Born in Massachusetts in 1877, his early years hinted at an extraordinary mind, one uniquely attuned to numbers and patterns. While his family encouraged him towards a life of farming, young Jesse possessed an insatiable curiosity for the abstract logic of figures, a fascination that would define his entire existence. This innate inclination towards quantitative observation laid the groundwork for his future, shaping his unique approach to the markets long before he ever set foot on a trading floor. His formal entry into finance came at the tender age of 14, when he secured a job as a board boy at a Boston brokerage firm. His duty was to transcribe stock quotes from a ticker tape onto a large blackboard, a seemingly mundane task that became his unwitting classroom. Day after day, as he meticulously chalked up the fluctuating prices, he began to discern patterns, rhythms, and subtle shifts in momentum that others simply saw as random numbers. This relentless, almost meditative observation of the tape became the foundation of his legendary market reading ability. It was in the illicit bucket shops of Boston, small establishments that took bets on stock prices without actually executing trades, that Livermore honed his nascent speculative skills. Here, with minimal capital, he began to put his tape-reading observations to the test. His intuitive grasp of price movements quickly allowed him to consistently beat the bucket shops, leading to his frequent banning from these establishments. These early successes, though small in scale, provided him with invaluable practical experience and instilled in him a nascent confidence in his unique analytical gift. These initial triumphs, however, also fostered a certain youthful overconfidence. He developed a belief in his own infallible intuition, an understanding of the market that seemed to transcend conventional wisdom. This early period was marked by rapid gains, followed by occasional humbling losses, as he navigated the nuances of actual trading versus the simplified mechanics of the bucket shops. Yet, even in these early setbacks, he demonstrated an unwavering resolve and an insatiable desire to understand the market's true nature. Ultimately, Livermore's genius was not something he learned in academic institutions. It was forged in the raw, unvarnished reality of the market itself. His early experiences, from the monotonous task of a bored boy to the thrill of beating the bucket shops, were the crucible in which his extraordinary speculative talents were first recognized and refined. This innate gift for pattern recognition, combined with a relentless dedication to observation, marked the true birth of a trading genius. Despite his precocious talent and early successes in the bucket shops, Jesse Livermore's transition to the real exchanges was fraught with challenges, leading to his first significant falls. The raw, intuitive understanding he possessed proved insufficient against the complexities and psychological pressures of actual market trading. His initial triumphs were often followed by humbling reversals, demonstrating that even genius must pay its tuition fee in the unforgiving school of experience. These early setbacks were critical in shaping his future, forcing him to confront the limitations of pure intuition and the dangers of unbridled confidence. One of the primary difficulties Livermore faced was adapting from the simplified, fixed-odds environment of the bucket shops to the dynamic, unforgiving liquidity of the true stock market. In the bucket shops, his primary opponent was the house. On the exchange, he was up against a myriad of forces and sophisticated operators. His initial methods, while effective in small-scale betting, often proved inadequate when applied to larger positions in a genuine market where prices could fluctuate violently and in unexpected ways. This disorienting shift led to several painful lessons about scale and market depth. His early falls were often attributable to a lack of refined discipline and the pervasive influence of human emotions. He would sometimes hold on to losing positions too long, swayed by hope or pride, refusing to admit he was wrong. Conversely, he might take profits too quickly, missing out on larger moves, only to re-enter impulsively. These errors, born from inexperience and emotional impulses, were costly, resulting in his first significant bankruptcies and a profound realization that the market exacted a brutal price for impatience, arrogance, and the disregard of sound money management. These early defeats, though financially devastating, served as invaluable teachers. They forced Livermore to move beyond simple tape reading and begin formulating the systematic rules and principles that would later define his success. He learned that the market had no regard for his opinions or his past triumphs. It simply operated on its own immutable laws. This humbling realization was the catalyst for his relentless pursuit of objective, disciplined strategies, compelling him to analyze his mistakes with a cold, hard realism. Ultimately, Livermore's early falls were indispensable for his long-term growth as a speculator. They stripped away his youthful overconfidence and instilled in him a deep respect for the market's power. It was through these painful experiences that he began to understand the critical importance of capital preservation, emotional control, and the meticulous construction of a trading strategy. Every genius, he learned, must first pass through the crucible of defeat to forge the resilience and wisdom necessary for true mastery. Emerging from the crucible of his early failures, Jesse Livermore embarked upon a period of profound growth, systematically forging the unwavering discipline that would define his first great ascent. He meticulously analyzed his past mistakes, transforming the lessons of bankruptcy into the bedrock of a new, highly structured approach to speculation. This was the era where he moved beyond pure intuition, combining his innate talent for reading the tape with a rigorous set of rules, emphasizing patience, confirmation, and precise execution. It was during this period that Livermore executed some of his most famous and profitable grand trades, particularly in commodities like wheat and cotton. These were not impulsive ventures, but meticulously planned campaigns, often taking months to develop. He would patiently observe the underlying conditions, waiting for the market to confirm his thesis, rather than attempting to anticipate every move. He understood that large profits were made by riding major trends, not by trying to capture every small fluctuation. His strategy revolved around what he termed key points. These were critical price levels that, when broken or confirmed, signaled a clear shift in the market's line of least resistance. He would initiate a small probing bet at these points, and if the market validated his entry by moving in the expected direction, he would methodically pyramid into his position, adding more shares at subsequent key points, scaling up his commitment only as the trade proved profitable. This disciplined method minimized his initial risk while maximizing his exposure to powerful, unfolding trends. A defining characteristic of Livermore's success in these grand trades was his extraordinary ability to wait, observe, and then act with decisive conviction, often running directly counter to prevailing public opinion. While others were swayed by rumors or emotional impulses, he remained detached, trusting his own analysis of price and volume. He understood that the crowd was invariably wrong at critical turning points, and his success lay in his willingness to be lonely, to go against the herd when his rules dictated it. Ultimately, Livermore's first great ascent was a testament to his profound capacity for self-correction and the relentless pursuit of market mastery. He learned to control his emotions, adhere to a strict set of rules, and patiently wait for the market to reveal its true intentions. This period of disciplined growth transformed him from a talented but erratic gambler into a true speculative force, setting the stage for his most legendary triumph. Jesse Livermore's most legendary and spectacular triumph occurred during the tumultuous panic of 1907, a period of intense financial crisis that saw the stock market plummet and countless investors ruined. While the vast majority were being financially decimated by the accelerating decline, Livermore, through sheer foresight, unwavering conviction, and nerves of steel, managed to amass an astonishing fortune, solidifying his reputation as a speculative genius capable of profiting immensely from a bear market. Leading up to the panic, Livermore had developed an intuitive sense that the market was dangerously overvalued and ripe for a major decline. He began building substantial short positions, betting on prices to fall, long before the general public or even most professional investors sensed the impending disaster. His methodical observation of the tape revealed subtle signs of weakness in distribution, signals that screamed warnings to his discerning eye, even as the surface appeared calm. This early recognition of the market's underlying decay was a hallmark of his unparalleled analytical ability. As the panic accelerated and the market plunged into outright chaos, Livermore's short positions multiplied in value, generating paper profits that swelled into millions. He famously endured immense psychological pressure during this period, as brokers, faced with unprecedented market turmoil, demanded additional collateral from short sellers. While other speculators were wiped out, his unwavering conviction in his analysis and his meticulous capital management allowed him to withstand the storm and ride the market's freefall to unparalleled gains. His legendary status was further cemented by his direct interaction with J.P. Morgan at the peak of the crisis. As the market teetered on the brink of complete collapse, Morgan, leading a consortium of bankers, sought to stabilize the situation. He summoned Livermore, implicitly acknowledging his immense influence on the market's direction, and urged him to cease his short selling to prevent further panic. Livermore, recognizing the gravity of the situation and the opportunity for personal gain, agreed to cover his shorts, effectively playing a pivotal, albeit forced role in stemming the tide of the panic. Ultimately, the panic of 1907 marked the absolute pinnacle of Livermore's speculative genius. It was a period where his analytical prowess, his unshakable conviction, and his extraordinary emotional control converged to create an outcome that defied all conventional understanding. He didn't just survive the crash, he thrived in it, demonstrating a singular ability to act decisively and profitably in the face of widespread despair. This monumental success cemented his place as arguably the greatest individual speculator in financial history. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain. Despite his monumental triumph in 1907, Jesse Livermore's life was a dramatic series of spectacular rises and equally devastating falls. His subsequent bankruptcies, particularly his second and third major collapses, revealed critical flaws in his character and methodology that even his genius could not overcome. These downfalls were often attributable not to a lack of market insight, but to the insidious influence of pride, a dangerous tendency towards overextension, and the corrosive impact of personal tragedies. Success, I observed, often sows the seeds of its own destruction when humility is abandoned. One of the primary psychological vulnerabilities that led to his repeated downfalls was an almost inevitable overconfidence that often followed his immense successes. After making millions in a major move, a subtle sense of invincibility would sometimes creep in, leading him to deviate from his own disciplined rules. For example, after his 1907 triumph, he made a series of errors in the cotton market, losing a significant portion of his fortune by refusing to cut losses on a trade that went against him, a direct violation of his own hard-won principles. Pride in being the top speculator sometimes overshadowed the humility required to submit to the market's judgment. His inclination towards overextension also played a critical role. Livermore often found himself dealing with enormous amounts of capital, and the sheer scale of his operations sometimes led him to take positions that were too large or to leverage himself excessively. When a market unexpectedly reversed, the sheer size of his holdings meant that even a minor unfavorable move could lead to immense paper losses, forcing margin calls and involuntary liquidation. This susceptibility to taking on too much risk, driven by the lure of even grander profits, became a recurring theme in his falls. Beyond market mechanics and psychological pitfalls, Livermore's later life was plagued by a series of personal tragedies and emotional turmoil that undoubtedly impacted his trading judgment. He experienced multiple divorces, significant family strife, and the tragic death of his son. These deeply personal struggles took a toll on his mental clarity and emotional resilience, which are paramount for disciplined speculation. The ability to maintain an objective, detached mindset, crucial for trading, became increasingly difficult amidst the chaos of his private life. Ultimately, his downfall served as a sobering reminder that even unparalleled genius, when not buttressed by constant humility, rigorous emotional control, and a disciplined approach to risk, can be utterly shattered. Livermore's rises proved his brilliance, but his falls underscored the brutal truth that the market is an unforgiving teacher, and its lessons, if forgotten, are often repeated with devastating consequences. Despite the crushing weight of multiple bankruptcies, Jesse Livermore possessed an extraordinary and almost superhuman capacity for unbreakable persistence and a relentless drive for reevaluation. Time and again, after losing everything, he would claw his way back to the market, rebuild his capital, and reclaim his position as a dominant force. These comebacks were often as dramatic and instructive as his initial ascents, demonstrating not just his sheer will, but also his unwavering belief in his own ability to decipher the market's code. Each significant fall forced Livermore into a period of intense introspection and rigorous self-analysis. He would withdraw from the market, reflect deeply on his mistakes, and meticulously dissect the precise reasons for his downfall. This was not a period of self-pity, but one of cold, hard assessment. He understood that every temporary defeat contained invaluable lessons, and he was determined to extract every piece of wisdom from his painful experiences, refusing to repeat the same errors. During these periods of reevaluation, Livermore would refine his trading rules, strengthen his approach to money management, and reinforce his psychological discipline. He would emerge with a renewed commitment to his principles, recognizing where pride or overconfidence had led him astray. This ability to continuously learn from his own failures, to adapt his methodology, and to rise from the ashes of financial ruin was a testament to his profound resilience and unyielding belief in his ultimate triumph. His insistence on keeping detailed trading records was crucial during these comeback phases. By meticulously reviewing his past trades, both winners and losers, he could objectively identify patterns in his decision-making, his emotional responses, and the market's behavior. This data-driven self-analysis allowed him to refine his strategies and avoid repeating costly mistakes, giving him an unparalleled education in the unforgiving school of speculation. Ultimately, Livermore's repeated returns to the market after being completely wiped out are a testament to his most admirable quality, unbreakable persistence. He simply refused to be defeated. His belief in his own capacity to understand and profit from the market was so absolute that no amount of financial ruin could extinguish his spirit. These comebacks solidified his legend, showcasing the power of the human will when confronted by seemingly insurmountable adversity. From the crucible of his unparalleled experiences, the meteoric rises, the crushing falls, and the relentless comebacks, Jesse Livermore distilled a profound philosophy and a set of immutable rules that he believed governed all successful speculation. This distilled wisdom, a testament to his lifelong battle with the markets and himself, was most famously captured in Edwin Lefèvre's Reminiscences of a Stock Operator, a book that remains a Bible for traders and investors worldwide. Livermore's philosophy was rooted in the understanding that while the instruments and speed of the markets might change, human nature remains constant. Greed, Fear, hope, and pride were, in his view, the eternal drivers of market action and the greatest enemies of the individual speculator. His rules were designed not to predict every fluctuation, but to provide a disciplined framework for operating within these predictable cycles of human emotion, ensuring objectivity and preventing emotional impulse from derailing sound judgment. Key among his rules were principles of money management and risk control. He stressed the absolute necessity of cutting losses quickly, using stop losses, and never averaging down on a losing position. He also emphasized letting profits run, patiently riding major trends, and only adding to winning trades, pyramiding. These were not mere suggestions, but commandments, born from the painful lessons of capital preservation. He understood that survival was the prerequisite for prosperity. His philosophy also delved deep into the psychology of the market itself and the importance of reading its true signals. Livermore believed that the raw price and volume action always told the truth, if one was disciplined enough to listen. He advocated for trading at key points, specific levels where the market confirmed its direction, minimizing risk and maximizing probability. He rejected reliance on tips, rumors, or the opinions of others, championing independent thought and objective observation above all else. Ultimately, Livermore's writings and the philosophy contained within them were far more than just trading advice. They were profound reflections on the nature of human behavior under pressure, the importance of self-mastery, and the brutal yet ultimately fair lessons taught by the market. His legacy is his timeless articulation of these principles, providing future generations with a clear, albeit challenging, path to navigating the complex world of speculation. Despite his extraordinary resilience and the profound wisdom he had accumulated, Jesse Livermore's life culminated in a final, tragic downfall. This ultimate collapse was influenced by a complex interplay of changing market dynamics and, perhaps more decisively, the resurgence of his own internal demons. It served as a stark reminder that even a genius can be broken when external conditions become too challenging and internal struggles too overwhelming. The character of the markets themselves underwent significant transformations after the Great Depression of 1929. The speculative excesses that characterized Livermore's prime gave way to increased regulation, stricter controls on leverage, and a shift in market psychology. The grand, prolonged trends that he so masterfully rode became less frequent, replaced by more volatile and unpredictable movements. It is plausible that Livermore, accustomed to the old ways of a less regulated market, found it increasingly difficult to adapt his once perfected strategies to this new environment, perhaps losing his unique edge. However, many historians and observers suggest that the primary cause of his final demise lay within his own psyche. His personal life was increasingly marked by turmoil, continued marital problems, financial pressures from supporting multiple families, and the tragic death of his son. These profound personal sorrows, coupled with the immense mental strain of a career in speculation, led to deep bouts of depression and a loss of spirit. The emotional detachment and unwavering conviction that were so vital to his trading began to wane, replaced by weariness and despair. In his later years, Livermore reportedly struggled with profound loneliness and a sense of having lost his touch. The sheer weight of repeated comebacks, the constant pressure of speculation, and the cumulative impact of his personal tragedies appeared to overwhelm him. He lost confidence in his own abilities, a fatal flaw for a speculator whose entire success hinged on unwavering self-belief and decisive action. The mental fortitude that allowed him to rise from countless bankruptcies finally faltered. Ultimately, Livermore's final fall was a poignant and cautionary tale. It showed that even the most brilliant mind, when plagued by internal struggles and faced with a profoundly altered external landscape, can eventually succumb. His end underscored the brutal psychological demands of speculation and the importance of holistic well-being. It was a tragic conclusion to a life defined by extremes, a final, painful lesson about the fragility of even the greatest genius in the face of overwhelming internal and external pressures. Jesse Livermore's life, a dramatic tapestry of unparalleled speculative brilliance and devastating personal struggles, leaves behind an enduring and invaluable legacy for all who venture into the financial markets. Though his own end was tragic, the lessons he paid for with millions, and often with his peace of mind, serve as a timeless beacon, illuminating both the immense opportunities and the inherent dangers on the path to wealth. His story, famously immortalized in Reminiscences of a Stock Operator, remains an indispensable Bible for traders across generations, proving that the human element in markets is eternal. His greatest contribution lies in his meticulous articulation of a disciplined speculative philosophy rooted in objective observation, risk management, and psychological control. Livermore's rules such as cutting losses quickly, letting profits run, pyramiding on the right side, and waiting for key points are not mere historical curiosities. They are foundational tenets of sound trading that remain as relevant in today's algorithmic markets as they were in the early 20th century. He provided a practical roadmap for operating with logic rather than emotion in an arena driven by collective human behavior. Livermore's story is also a powerful cautionary tale against the perils of human psychology. His own downfalls repeatedly underscored the destructive power of pride, overconfidence, greed, and the failure to adhere consistently to one's own rules. He showed that brilliance alone is insufficient. It must be coupled with unwavering humility and rigorous self-discipline. His life stands as a testament to the fact that the market is the ultimate equalizer, punishing hubris and rewarding cold, hard realism. His insights into market psychology were particularly prescient. Livermore understood that human nature, the oscillations between fear and greed, mania and panic, drives prices to extremes. He recognized that the crowd is almost always wrong at critical turning points, and that true profit lies in acting against the prevailing sentiment when one's objective analysis dictates it. This understanding of collective behavior remains a cornerstone for anyone seeking to decipher the market's true language amidst the noise of opinions and emotions. Ultimately, Jesse Livermore's legacy is that of an eternal teacher. His life serves as a stark reminder that the market is the toughest, yet most rewarding school. It demands continuous learning, relentless self-analysis, and an unshakable commitment to discipline. For future generations of speculators, his story illuminates the path to mastery, not through shortcuts or luck, but through the profound understanding that to conquer the market, one must first conquer oneself. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain.